The big talking point, of course, is what we're seeing in oil prices, which are surging. But at the same time, we've got other commodities, industrial metals, etc., which are cooling off. What to make of it? Peter McGuire is CEO at Exim Australia, is joining us to take some questions. Peter, great to have you with us here. Thank you very much. I want to start with what's happening in China and what impact it could have on industrial metals, Peter, with renewed COVID-19 related lockdowns. Maybe it's very small and it won't last, especially what we saw in, coming out of Shanghai yesterday. But what does it mean for prices?
Well, Prashant, a couple of quick things. First off, if it does materialise and become a much greater issue, then naturally that's going to impact demand, and we've just got to work through that. So it's very much an hour-to-hour proposition and just gauging, the health crises and how that's going to be managed moving forward. So there's going to be two things. If it's going to be tight and they're going to lock it down, then I think that's going to have an impact as far as base metal prices. And if it goes the other way, then I wouldn't be surprised to see an uptick as far as prices, considering where they currently sit.
Peter, good morning. You know, the trading giant Trafigura, as we discussed earlier as well, came out with this headline number of $150 a barrel on crude, and that really rattled the street quite a bit. I mean, is that the base case now, that for the rest of this year we could be hitting that $150 level, or, I mean, is that just alarmist?
Well, I think it's too early to call, considering we've got 7.5 months left, Sonia, and good morning. So the first thing is we've got to work through that and just see how the impact's going to be. But we've got, Brent sitting at 122. We were at 123 last week, then it dived down to 113, and here it is back at 122, 123 levels. Very, very strongly bid up. So I take on board those comments. I don't know if they're alarmist, considering what we've lived through together over the last 2 years. -40, and we've been as high as, that mid-130 number. So maybe they do hit a 150. I certainly would not be a supporter of that, considering that the impact it's going to have to global inflation and the hurt on Main Street, especially countries like India.
So we're talking about oil prices, right? But there are underlying oil product prices which are also very, very steep. I mean, sort of
absolutely,
gasoline cracks, etc. So what could change, in your opinion? So there are large, China has got to do more, maybe. But otherwise, it looks like pretty much tapped out, right? For some time, there are some large refineries coming up, I think in the Middle East, Nigeria, etc. But does it look like it's going to resolve itself quickly, or this is here to stay, the situation?
From where we're looking at the moment, and as we've got all of these countries coming back online and coming back online quickly, and let's assume that China does come out of the blocks and they don't lock it down, then their demand is naturally going to increase, and increase, I think, quite significantly quickly. So there's the first point. How we meet that from a production side is going to be interesting, and you don't want any bottlenecks, and you don't want any, logistic issues. Or geopolitical concerns. So, it's a fine line at the moment, and I would like to see, like most consumers, oil back at that $60 to $70 a barrel, but where it's sitting at the moment, it's double that price. And that creates, I think, a lot of angst, great for traders, but a lot of angst and a lot of hurt for the consumer side. So, I'm just looking at the big picture and going, just breathe in and try and get a gauge of what's happening.
Okay, so you said you're not sure if crude at $150 is an alarmist projection or not. What are you projecting for the rest of the year?
Sonia, I was at the New York Mercantile. I was invited by CNBC, your sister station, in 2008, and I spoke with Mandy Drury at the New York Stock Exchange. And that day I was there, it was 147. So that's 14 years ago. I don't know if 150 is achievable, but when you're sitting at 125, it's not very far away. And the momentum at the moment, and maybe you're going to see a push further higher. So I don't know what we're capable of, but I know that the hurt and the concerns we've got globally with inflation and central banks trying to manage those expectations, it's not a rosy world at the moment. It's not a good position to be in. And then you've got the worry as far as stagflation and all of those issues on the other side.
All right, we leave it at that. I mean, NYMEX, Brent now at what, 14, 15-year highs. So clearly nothing has changed since the last time you had that interview for sure. I mean, for anything, it's only, going higher here on Brent.